And Howard Ward, Gabelli Funds CIO of Growth, joins us here on set. Great to have you here, Howard. Talk to me about the trimming. I mean, when you got a growth fund and you got multiple trillion-plus market caps, what makes you decide, enough is enough?
Well, you've all heard the old saying about pigs get fat and hogs get slaughtered. I'd rather be a pig than a hog. And in 2023, these stocks were amazing. You know, returns of 100%, in some cases more than 200%. And then they began this year with at another torrid pace. And we were concerned, still are concerned, about the prospects for a recession this year. We're not out of the woods on that yet. And in a recession, these stocks are all going to hiccup big time. And so we decided we would take some of our profits out of these names, rotate that money, bring down the tech weighting, bring it down a little bit. I mean, John, the tech weighting was up near 60%. That's a lot of tech. So we brought that down. And specifically in the case of Apple, I mean, we built our Apple position 10, 12 years ago at very low prices. Apple's growth has clearly been slowing, almost no growth last couple of years. It probably will accelerate now. But we have to acknowledge that. We had a 12% stake in Apple. We've cut that now, I think, 3 times over the last 2 years, getting it down around 5%. To acknowledge the fact that the easy money with Apple, you know, it's gone from being a 20% grower to a teen grower to a single-digit grower plus a share buyback to get it to double digit. You know, you want to pay too high multiple if you're getting 4% of your growth from share buybacks. So we still like the company, great products. We hope the growth reaccelerates, but that's been in a trib mode. But the CrowdStrike, the ServiceNow, the Adobe, again, huge 2023s. Long-term prospects, very good.
Yeah.
The positions had become large. And again, let's just not be too greedy. If we have a turnaround in the market, let's not give away everything that we've gained.
Yeah.
So that's all it was.
Okay, so you're trimming tech because tech was such a big part of the fund. Where do you find growth outside of tech right now?
I hate that question. So it's hard, but the other big story, really, and it was a great story, it still is a great story, is the GLP-1 drugs.
Yeah.
In the case of Eli Lilly, which is our biggest holding in this area, you've got Zipbound and Mounjaro. And you've probably seen the press, they can't produce these things in enough supply to meet demand. The demand expectations are very high. I think they will still go higher. You know why? Nobody wants to be overweight. They don't.
Unless they want to be overweight tech stocks.
Unless they want to be overweight tech stocks. And as people become more comfortable with the safety profile of these drugs, the demand is going to go even higher. And yes, there will be some additional competition from other drug companies over time. But right now, it's Lilly and Novo Nordisk that really own this market. And Lilly, we think, has the better product.
Let me take you back to tech real quick, because a lot of people say, I notice you're not trimming Nvidia. I don't think you said that.
No, actually, we added to Nvidia in the first quarter.
So why you trim ServiceNow? You know, people argue, okay, well, Nvidia always grows into its valuation. Some of these software names are growing nicely.
Yes.
So why do you trim them?
Well, okay. Software weight in the portfolio versus the hardware weight in the portfolio. The software weight in the portfolio was substantially overweight. The hardware was underweight. So it was a little bit of more hardware, but also just NVIDIA specific. What's happening there is a once-in-a-generation kind of thing. And artificial intelligence is this tremendous new technology that will surely bring innovation and productivity, perhaps at rates we've never seen before, impacting a whole host of industries. So it's really rare to get a shot to buy a company that is in the catbird seat, that essentially has a monopoly position on the tools that are required to generate this technology.
Uh-oh. The DOJ might have heard you.
And you know, don't get me started on that. Okay. So NVIDIA is really a special situation within tech. And on the hardware side, we're more comfortable owning more NVIDIA and less of some of the other chip names. And software, it was just too big a part of the portfolio. So we love these names, but people need to understand, if you buy tech stocks today, don't think that they go up all the time.
Yeah.
They don't. And if we do get this recession that is still a risk, they will all get hammered.
Okay.